All right. Good morning, everybody, and welcome to another episode of Breakfast Trades. I'm your host, NebraskanGooner. Nah, bro, you ain't NebraskanGooner. What the fuck? NebraskanGooner could not make it today, so he actually asked me to fill in for him. So I will be your host. I am KobraTrading. If you want a link to my YouTube channel, it will be down in the description below. I also do tutorials and helpful videos, much like NebraskanGooner does as well. So today we're actually going to be talking about patterns. More importantly, we're going to be speaking about the reliability of these classical charting patterns and why in crypto they're a little bit different than how these patterns would normally react or play out in traditional legacy markets and Forex markets and stuff like that. Okay, so without talking anymore, let's go ahead and take a look at the charts and I'll show you some examples. All right, guys. So before we begin and we take a look at a couple examples, this is going to be a little bit of a shorter video today. And one of the reasons for that is a lot of this can be summed up by me basically just explaining to you right off the bat that when you see these patterns playing out in any of the digital asset markets, take them at face value. Chances are they have a 50% of playing out.
But what if one is a bullish pennant and the other one is a bearish pennant? They're supposed to play out and those are continuation patterns.
Yes, technically that is the way that they're supposed to play out. I have a whole video of that on my own YouTube channel. And I definitely clearly state that in crypto, these patterns are 50-50. Okay. They're 50-50. In legacy markets, they're a little more reliable. Same thing with like foreign exchange, okay? Maybe like 65% accurate because the volumes are more liquid and you have more people trading the currency pairs and things like that. So let's go ahead and I'll give you a couple examples of how these play out normally or what we have typically been seeing happen on Bitcoin, at least in the most recent price action. Okay, so here we are, Bitcoin chart. This is a 4-hour. Pretty much everybody had this big pennant drawn, right? One way or another, whether it was from here or whether it was from down here, however you draw your trend lines, chances are you had this pennant drawn out. I did as well. Okay, there was a lot of touches back and forth through here. Really nice consolidation on the chart, and technically this is a bearish pennant, right? Price action moved down. We formed the pennant. You would be expecting price to possibly make a 1-to-1 off this, right? If we were going to be making a 1-to-1 here, our targets would have been down here 10K. Obviously that didn't happen. Even a golden pocket 22K, that didn't happen. What did happen? Well, we ended up getting a fake out, right? So we got a throw over of our lower limit here. This is what's known as a throw over, and price immediately did a V-shaped recovery, went past the previous level of resistance, retested it, broke back down below the triangle again, and then had another fake out and broke out to the top side. And now we're right back down where we started. When you see some nonsense like this happen, this is a pattern invalidation here, okay? This needed to break to the top side and then be breaking through this top side resistance from where we started. That didn't happen. We rejected here, okay? So this was a major rejection. Another nice thing would have been if this would have done that, okay? And then broken this high. Clearly, we didn't do that. So that's just one example on the most recent price action of how these patterns can get invalidated or just not play out or play out the wrong way, like not the way that you were anticipating them play out. So here's another good example of a pattern that failed and didn't end up playing out. And I'll just do one more example of this just to show you. This is all really recent price action, right? I mean, this goes back to April. So still the spring and summer months. So we had this head and shoulders pattern here, right? Okay. What happened? Shouldn't it have gone up to here? Well, yeah, it should have, but guess what? We were rejected right here at this level. Okay. Had a big rejection here, womp, and then price completely rejected. That's another example. And this is a pretty large high time frame head and shoulders pattern here. So we faked out here, we rejected, then we got another dip and okay, well, this is the shoulder. Nothing happened here either. Okay. In fact, what ended up happening while everyone was focusing on this head and shoulders pattern, a new pattern formed right over here. And this pattern did play out. We had a ascending wedge here, which is bearish. We entered in it from the top side, then formed higher highs and higher lows all through this little ascending wedge. And then we broke down. Okay, so that's just a couple of examples. I think there was one down here too. Technically, this was a head and shoulders that I was watching. This did not play out either. Okay, this needed to break through this high over here in order to be a true reversal pattern. That didn't happen. We rejected here. The same thing happened here. Okay, head and shoulders, we rejected. We didn't even retest the previous high over here. In fact, it stopped short. All through here, there's been head and shoulders patterns. This one from the downside did. Okay, so this was another one. We broke that neckline. We kind of had a retest here. And this was kind of like a fake out. And then we continued to the upside and we retested these highs. But technically, that's still a failed pattern because it's supposed to be a reversal pattern. Head and shoulders is typically a reversal pattern. And we did not get that here. Okay, so, again, that was another big fat rejection. Like this would be a bear flag, right? Where price comes down, you consolidate in here, and then price breaks down further to the downside. Obviously, the exact opposite for a bull flag. Price comes up, you enter into a channel making lower lows, lower highs, price continues higher. And then obviously, I just showed you the bearish pennant, which is supposed to be a continuation to the downside. And there's also a bullish pennant, which is supposed to continue to the upside. Okay, so those are basically all of your patterns. Obviously, then you've got, your head and shoulders, which I just did examples of. Typically, those are reversal patterns that you see like this. Once you break that neckline, you're good to go for further upside. We always see on crypto Twitter, right? A lot of these guys, they're, oh, hey, look at this bullish pennant, like we're going to break this to the upside. The pennants are very easy to trade. They're very good setups. But the thing is that you have to have a pretty conservative stop loss on those, especially if you are utilizing leverage to be playing those out effectively. Okay. If the price turns around on you and your stop is really loose and that pattern invalidates, or it has a fake out and then invalidates, you stand a pretty serious chance of losing some money. Make sure that the rest of the videos that are in NebraskanGooner's playlist down below, make sure that you check those out. I know for a fact that he does a ton of videos on risk management, especially with leverage trading. He's got a whole Prime XBT series that he's done specifically for leverage trading. All right, guys, so that is it for me here on your channel. Make sure that you check out all of the links down in the description below. But more importantly, if you guys want more in-depth details about trading, one-on-one stuff and things like that, make sure that you check out elevate-trading.com. Smash the like and subscribe button so that you don't miss out on any of the future videos here on this channel. I will see you guys later. Happy trading.